Sehr geehrte Damen und Herren, wir melden uns heute nochmal hier aus Vancouver, wie immer noch auf der Suche nach interessanten Gesprächspartnern. Haben wir heute Jayant Bhandari bei uns. Hi Jayant, it's nice to meet you here in Vancouver, and you are a really well-known market expert out of Singapore. And can you tell us a bit about your background?
Thank you for having me here. I used to work with, I worked with US Global Investors, a boutique firm based in the US for 6 years, and I used to live in Vancouver for those days. So I had a very nice 8 years in Vancouver. I also worked with a newsletter company, KC Research, for 1 year. And then I moved to Singapore about 2 years back, and I have been advising institutional investors on investing in junior mining space for all these 7-8 years now.
Okay, so especially India and Singapore, we know every year the speech about the wedding season, and everybody is talking now the gold price will rise up because they going to buy all the gold what they can get for that season. Is it still the same, or was there some change in the market in the past, because the gold price rose up until 1900 and now it's back on around about 1200? So do they still want to have the gold?
Okay, so you have to understand that in the Indian currency, gold is still trading at its close to the highest level ever.
Okay.
So Indian currency has devalued by about 30% in the last 2 or 3 years. So as a result, it is still very close to its highest price. Yes, Indians are crazy about gold. They still want to keep investing in gold. That does not mean that they can still invest in gold, because Indian economy is stagnating. People have less cash than they had before. The growth rate is falling. The bulge is taking place in the lower, in the left-hand side of the demographics, which is the younger generation who consume more than the older people. Mm-hmm. So the saving rate is falling in that country. As a result, there's less money in that country for investing in gold and properties.
Okay, so is there maybe a change going on if they don't have too much money anymore to buy the gold, so they go for silver, maybe?
Well, yeah, I mean, silver has a different usage, and yes. If you understand how the caste system works, how the class system works, it is usually the poor people who tend to buy silver. Mm-hmm. It's not the rich people who buy silver so much, but also there's a fall in silver demand among the rich people, because they used to use silver utensils at one point of time, but now that silver has become more expensive, it's too difficult to keep silver utensils. Despite that, they have, from what I have seen, silver market was much more busy, and I was in India for the last three months. Silver market was much more busy than the gold market was. So there was indeed an increase in demand for silver, given the fact that gold is so much more expensive, and given that Indians have less capacity to buy precious metals. So yes, silver is probably very interesting for Indians.
So that means in the future we will see more buying ongoing on silver than on instead of gold. Did I get that right?
Well, silver market is well supported, but gold is a commodity which is 50 or 60 times more expensive than silver.
Right.
So if you want to really preserve your wealth for a long term, you want to keep gold. It's a commodity that you can keep in a corner of your house and not have anyone find out about it. So gold is really a commodity of interest for long-term interest in the country. Yeah.
And the same we saw in China. Years ago, it was not allowed for the Chinese people to keep gold. That changed as well. So that means the Chinese are right now behind gold. It's the same as the Indians to do. And do you think there will come more buying for gold in China?
Well, I spend a lot of time in China. And if you go to Hong Kong and in Chinese jewelry stores, they are so packed up with buyers.
Okay.
So Chinese are picking up not only the slack that Indians have created, they are buying even more. So Chinese are big buyers of gold, and I think they believe in gold more than Indians do these days, I guess.
Okay, so that means also we will see a demand on gold in the future, because right now all the companies had to cut down their production because they had problems with the production cost, and but the Chinese and the Indians are still buying gold, and there must be not that much left over in the banks for them.
Well, I can't give numbers on it, but as I said, Indians' demand for gold in India is a stagnant, and it will likely not grow, given the fact that Indian economy is not in a good shape. It's actually in a bad shape, and I think going forward, Indian economy will very likely get worse and worse. And what I'm saying is very contrary to what the general market believes. The market thinks that India is now going into a phase of high growth. I do not agree with that, and I spent a lot of time traveling and talking with people in India. So India is not the market that will use a lot of gold or increase its demand for gold going forward. But I think Chinese, given the risks that rich Chinese feel about their wealth living within China, they are certainly doing a lot of shopping in Vancouver, for example. Really? They are doing a lot of property shopping. Property market is so expensive in Vancouver because of the Chinese consumers. And Chinese are, of course, investing in gold to preserve their wealth from the confiscatory policies of their governments, which is actually the case all over the world these days.
Yeah, that's right. So what do you think where we will see the gold price in the future? Because, it falls from 1900 to 1200 right now. And do you think we will see higher prices during 2014 or 2015, or should we stay on that level?
Well, I am an equity analyst, so I don't really think much about gold prices.
Yeah.
And I think one risk that markets should be aware of is the fact that gold has not done what it should have done over the last 3 or 4 years. All the Western countries have continued to print more and more. The governments have continued to print more and more all over the world. As a result, gold prices should have gone up quite significantly, but they haven't. And when your trade doesn't do what it should have done, it gives me a reason to pause. But despite that, I'm an equity analyst. I'm not so much interested in gold prices.
Okay. Do you also do some stock pickings of good companies what are produce gold that maybe you also buy shares about from them, or?
So I don't, historically I have not enjoyed investing in gold mining stocks, and the reason is that gold mining stocks in the past gold stocks have been extraordinarily expensive in the past.
Yes.
And very strangely, gold analysts have pumped up the valuation of gold companies in the past. They used to recommend target price of gold companies at 2 or 3 times NPV, which to me is completely irrational. As a result, gold mining companies is still very expensive in my view. They have always been expensive in my view, and I don't like gold mining companies. I like investing in junior mining companies that are still in exploration and development stage.
Okay. Especially also in that times, because it's not easy to get money for these companies for exploration, because all the shareholders' trust is not that good anymore.
Especially in these times, I prefer junior mining, because junior mining still has a capacity to shut down their operation, go into hibernation, and not do anything at their projects. Whereas gold mining is very difficult to shut down. You can't really close a mine, fire all the people. It's an extraordinarily difficult exercise to shut down a mine, whereas an exploration project can be shut down for a few years if they have to.
That's right.
But also you can still focus on projects that are high grade, good projects.
Yeah. But then you have also to look for these projects that have a perfect infrastructure. Otherwise, I don't see a chance that they come back in the market.
Sure, you have to do a valuation on these companies, and you have to make sure that those companies provide you a nice upside even at the current or lesser gold price. And if they give me an upside, then I'm interested in looking at those companies.
Okay.
There are not many companies, I have to say. A lot of these companies will cease to exist, and it's a huge risk trying to invest in a lot of junior companies today, as it has always been the case. These are promotional companies. A lot of these companies have nothing in them, and you have to be careful about what you invest in.
Okay. You said, especially in Vancouver, the Chinese bring the money in to look after such projects, right? And it looks like that the Chinese want to spend much more money now in Canada or in USA to find such projects for them?
Well, certainly I'm working for a couple of Chinese clients who are looking for Canadian projects or Canadian companies. Yes, there's a lot of interest among Chinese and Singaporeans and Hong Kong people to invest in North America. At the same time, Chinese have made some bad investments in iron ore deposits in Australia.
Okay.
So they are a bit concerned about having to lose face by investing in junior mining companies. So there's a increased level of concern among Chinese investors. But as such, they are cash-rich people and they want to invest their money. They want to deploy their US dollars and foreign currency into legitimate projects abroad.
Jamin, do you have also some favorite stock pickings what you maybe also own in your own bank?
Yes, I own some. I'm well invested in the junior mining space, and I at this point of time I like two specific stocks. One is Sirocco Mining.
Okay.
Sirocco Mining owns about 5% of the world's iodine production. They are merging with a company called Canadian Lithium, which will be hopefully will be producing about 12% of the world's lithium carbonate.
Okay.
Sirocco Mining is currently trading at 35 cents or something, and that's not a lot higher than the cash that the company have. So you have a possibility of acquiring two good projects run by some extremely good people, which is Rick and Simon Jackson of Sirocco Mining. They will take over the management of the merged entity. But moreover, by investing in Sirocco Mining, you have an arbitrage upside that the merger will provide you, which is about 15% as it stands today. So that's one company I like. I also like another company, Dalradrian. The ticker is DNA. It trades at the Venture Exchange, and sorry if I forgot to mention about the ticker of Sirocco, that is SIM.
Okay.
Now, Dalradrian has a project in Ireland, Northern Ireland, and it's a narrow vein mine. At the current share price, I'm getting about 20% upside, 20% yearly upside in owning that stock, even at the current gold price. So that's the kind of a stock I like to look at. The risk, of course, is that Dalradrian is a development stage company. They still have a permitting issue, and their veins, there could be a risk of technical risk related with the project. And when investing in a junior mining space, I want to cover my risks as I go. I buy, and I might want to sell some of those before the technical risks have a possibility of appearing.
Okay, so thanks a lot for to talk to you here in Vancouver, and that you mentioned some nice stocks. We will have a look at these two as well, and hopefully we meet next time maybe in Toronto on the PDAC, and we can talk about the stocks again, if they rose up or what happened.
Sounds good. Thank you very much.
Thanks a lot for meeting you here. Bye.
Yes.